Good morning and welcome to the Gold, Goats, and Guns Market Report for August 4th, 2019. My name is Tom Luongo. I hope you have all enjoyed your week. We've got a lot to talk about. And I want to apologize for not being here on Wednesday. My vacation really did kind of screw up with my schedule, screw my schedule up more than I thought it would. Tuesday night, we went out camping, which I've got pictures of, so at least you get that. On Tuesday night on the for an entire evening, and by the time I got back Wednesday morning, I was exhausted, and because I don't sleep when I camp, so I went home and went back to the room, got breakfast, and passed out for most of the afternoon. So that wasn't going to happen, and then I realized that I was completely behind the curve on all my other things that needed to be dealt with. So I was doing that. So unfortunately, I had to give that one a miss. I'll try and make up for it today. I've got both vacation pictures as well as a number of monthly closing charts, and we'll go from there. Honestly, before the Fed's decision on Wednesday morning, I don't think things would have been all that interesting anyway. So now that we have monthly closes, now that we've got Donald Trump's response to the Fed rate cut on Wednesday, I think this is probably far more of an interesting report than before. All right, let's get going. All right, so like I said, I've got vacation picks, but let's talk about the Fed real quick. I think that the Fed has been trying to thread a needle. I think they've been trying to thread a needle now for about 6 months. I think Jerome Powell's been under tremendous pressure from Donald Trump. In many ways, he doesn't deserve it. It's mostly because Trump doesn't understand what the hell is going on, because Trump's view of trade and monetary policy is severely lacking, and I mean that in the most virulent way imaginable. I really do believe that Donald Trump is an economic ignoramus. I really believe that, and I think you guys need to realize that Trump doesn't know what he's doing. He thinks he knows what he's doing, but he doesn't. And I'm at that point where I can't make heads or tails of what's going on with his administration at this point. Every time you think that we've turned a corner and we're going to start moving towards something, a halfway reasonable, rational policy about something, let's not go to war with Iran, let's not do this, let's not do that. All of a sudden, it's like it's one step towards peace and then 3 steps towards war. It's insane. And I can't make heads or tails of who's actually still in charge. I mean, why isn't John Bolton fired yet? Bolton has embarrassed Trump in so many different ways. And now Trump is mulling a full naval blockade of Venezuela. This has huge effects on the markets. Like, you can't bully the world into only buying your oil in dollars, Don. It doesn't work that way. You can't do it. Everybody knows your game. It's not that hard for them to figure out counter moves to it. You can complain about it all you want, but it's not going to change. And Powell's response on Wednesday was to cut rates by 25% while signaling to the world that the global economy is in a real pickle and that they don't have any answers. The best they can do is cut rates a little bit, but the American economy is still relatively strong because they can't cut rates. How do you cut rates 50 basis points with the stock market at an all-time high? It calls into question everybody's theories about how this stuff's supposed to work. So, Powell's still trying to maintain not only his independence from Trump, but his independence from the rest of the world by not being the world's central bank, which, by the way, they are the world's central bank. But he still has to maintain that illusion that he still works for the American people. Otherwise the Fed's going to get consumed by the orange Obama, who's then going to go on an MMT fueled binge and take us to and take the budget to $8 trillion a year because we got infrastructure to spend on. We gotta buy all these bridges and stuff, and we gotta stimulate. Come on, Don, give me a break. I mean, it's insane. He honestly thinks the Fed was raising rates as a way to undermine his economy. The Fed was raising rates because it had to. But he's such a narcissist, and he's such an ignoramus that this is what we have, and this is how we deal with. So the Fed doesn't give him what he wants. He then throws more tariffs on China, because China refuses to give up their their sovereignty in trade negotiations, which he knows they're not going to budge on. I could do this for a week. It's just silly. All right, but understand that the Fed is in a very difficult position. The Fed is trapped, and Trump is blind. And that's where we are. And I won't say much more than that because I've got a lot going. I've got a lot of this commentary coming in this month's newsletter coming up. So, yeah, it is really that. And you have to realize that this is the interplay domestically that's going to have tremendous effects globally. And I think it's reflected in the charts that we're going to show you after I go through a couple of pictures of what we did on vacation. So let's start here. This is the moment when we realized we weren't in Florida anymore. We took I-75 to US 82 up through Birmingham, and then we crossed the Big Muddy in Memphis, took I-40 across to just west of Oklahoma City, which, by the way, is the biggest boom-bust town I think I'm ever going to see in my life. They are building overpasses in Oklahoma City at the county line 11 miles east of the city proper. I have no idea where they're going to. And if they think that they're going to continue to grow based on this oil boom at this rate, I can tell you that it's not going to happen. If Oklahoma City thinks it's going to look like Dallas-Fort Worth, which I drove back through on the way home, oh my God, is that a mess? Both of those cities make Miami look tame, by the way, if you've ever driven to Miami. To me, it really tells me just how much there's a massive misallocation of capital here. And I haven't written about it yet. I'm going to write about it a little bit for the newsletter this month. It's important. But yeah, so this is Cimarron Canyon, North New Mexico. This is US 64, south of Eagle Nest on my way to Taos. And this was one of many spots where we could have just pulled off and gone, oh my God. So just to give you a sense of scale, I tried to take the picture. That's my daughter, Sophie, playing with the rocks, which she always does. Part of the reason why we went here is because my daughter has a fascination with rocks, and my wife works with a woman who is also part of the local gem and mineral club. And so they've just kind of gotten into, rock hounding and all that stuff. And Camille's just interested in anything. She just loves to learn stuff. And my daughter has a particular thing. She's always liked rocks. And she goes out into our driveway and she goes fossil hunting on our driveway. She's found nearly an entire clay pot. And she's found arrowheads and she's found all sorts of stuff. Shark teeth in our driveway, just in our driveway alone. And very, very cool. So, so just to give you a sense of scale here, I've got another picture of her with her showing off, with her, trying to show off to get the sense of scale. But I like this picture, but I like both of these pictures just to give an idea of how close this is. That's only 40 feet past the river, and then it goes straight up. So you can start, rock climbing right there with your, after a 200-foot walk from the car, which is on the side of the road. It truly is a canyon. And there's a lot of that all through northern New Mexico. If you've not been there and you like the outdoors, wow. So this is Red River, New Mexico, which is where we stayed. This is the little town, which is a ski resort and hunting and outdoors village. It's just, so it's, mostly little tourist shops and a couple of restaurants and whatnot, and a lot of hotels and lodges and resorts and stuff. But it's very, very cool. It's like what happens if Sicily, Alaska from Northern Exposure got a little bit of money. Literally every third car locally is a Jeep or a pickup truck. As a Jeep enthusiast, never seen so many Jeeps in my life. It was kind of cool. Made me happy. Made me a little wistful, though, we drive a Nissan Xterra, so it's kind of, a Jeep without, it's like a civilized version of the Jeep Wrangler. Probably a better car, actually, in the end, too, but, overall. And my Xterra was It was did yeoman's work. It was brilliant. We did about 4,000 miles over the course of 2 weeks, and never once had a problem with it. And it handled every road we threw at it, and it handled every thing. So, while Nissan's cutting 9% of its workforce, they should have never gotten rid of the Xterra. It's a great car. Not the most comfortable thing to drive 4,000 miles in, but that's okay. So, but it wasn't designed for that. More comfortable than my Jeep was. Let's put it that way. All right. So, but this is the. It's just you woke up every day and you look out and there you were. Our resort was way down the street over there on the right. And this, you could see look out and see the ski slopes. There was one of the other lift chairs is right over there, and it was just gorgeous. And I can't describe how, I live in North Florida. Everything smells like it's rotting because you're surrounded by life, and life is growing and then rotting and growing and rotting all day long. And everything kind of smells relatively like mold, right? That was not this place is the exact opposite. It literally was the exact opposite. Even my daughter didn't have to take an allergy pill for the 2 weeks that we were up there, so it was really cool. But this is at 8,700 feet. So walking around town for this guy whose house sits at 61 feet, and I walk upstairs and and my elevation changes by a measurable percentage, this was a challenge. And so we had no expectations when we went up there as to what we would actually get done. We had no plan. We didn't have we hadn't booked any tours or anything like that. So Camille eventually was able to get a 4-hour horse ride in. And she was very, very happy. Got to ride an old mule named Frank, and they had a great time together. Because my wife grew up with horses. So whenever she gets a chance to ride horses, it's always a great thrill for her. But now I didn't, because I've been on a horse once. I like horses. Just only been on them once. So, yeah, it was great. I mean, anybody who says that we're destroying the planet, yeah, right. No. Red River, New Mexico, it's beautiful. And the world is, no matter what humans, just watching how humans try to cling to life and try to cling to the size of these mountains, it'll give you an idea of just how tenuous all of our civilization is, and all of our so-called society. It's absolutely will put you right back in your place. That it's not about the big cities. There's so much land. If you've ever been out west, if you've ever driven through the western part of the United States, you realize just how big and how empty it is, and how literally almost completely untouched it is. And it's beautiful. All right. The last thing is, this is where we camped on the night before I didn't get you your last market report. That's Camille in the foreground. She doesn't like having her face shown. It's just who she is. That's Sophie. And that's us just starting a fire. We just got there. This is Sawmill Pass. This is literally like right out of town, up to the left. So in this picture here, it's like up to the left here, and then behind, and there's a trail that goes out of right out of town. You just like make a right, and boom, you're you're on this dirt road, and you're up into the mountains. And this is about 10,400 feet. Yeah, we collected firewood. I stayed up most of the night just kind of watching it, because I don't really sleep when I go camping, because I don't. And there's bears and there's mountain lions and everything else. But the cool part about this is that the clouds finally relented after dark, and then we got the entire canopy, and it was like being in an observatory. It was very, very cool. And the Milky Way was as clear as a bell for 160 degrees in all directions. I can usually see about the center of it from my house through the soup that is North Florida, and I consider that a privilege. Right? It's really hard to get a good dark spot where we are. There are a few, but as close as we are to civilization, to get have a place where we have is actually really quite a privilege. So this was a lot of fun. I enjoyed it, but I was exhausted by the time I get done, because I play at being an outdoorsman, but I'm really not. It's like I don't do it enough to be good at it. So there it is. And then the next day we did that, and then we recovered from that. And the next day we got up and we drove home. 25 hours. Sophie and I drove all night. She didn't drive. She just stayed up and kept me awake, gibbering about World of Warcraft or some other damn thing. And then, most of Friday was spent on the couch asleep. I did get some work done, but not much. All right, so that was my vacation. It was very good. It was really refreshing. I enjoyed it, and I thank you all for indulging me and for supporting me to the point where I can have my first literal vacation in 2.5 years, and I needed it badly. Let's get to the charts. Okay, so let's talk about gold. I got mostly monthly charts here. I've got a lot of charts today. So we're going to do gold, we're going to do Bitcoin, we're going to do oil, the euro, and the Dow. Let's talk about gold. What I really like here is if you look at the weekly chart gold, you'll see that this is August. So this is just August 1st and 2nd, right? What's important here is to note that if you look at the weekly chart, this is a very significant move, right? It negates it's a very significant up move. And but in the context of August, of course, it's not significant yet. Except when you start looking at it from a volatility statistics perspective, we're only 2 trading days in. So these are our pot odds for this month that we're going to break either the previous high or the previous low. And we're biased, based on the open, we're biased, 5 to 4, right? It's really a coin flip. But now that we moved up $28, or however much we moved up, now the odds of breaking that previous high are nearly 70%. We only have to, we have to break this distance from here to here as opposed to from here to here. That's the important part. And this is something you can do with the statistics that I generate. And if anybody wants a copy of one of the spreadsheets that I have, I'm more than willing to give them out to give you an idea of how it is that I calculate all this stuff. But it's very simple. It's just a very simple solver that says, if gold's moved a quarter, what's the possibility it can move $28, which in this case would be, say, the low or the high, break the previous low or previous high. That's how I get those odds. And then you can do the same thing by just putting in a different starting point. We'll say, well, if I've already moved $28, what's the possibility that I'm going to move $42? Well, having already moved $28, what's the possibility that we can move $42? And if that's greater than a coin flip, that's an edge. That's trading edge. And right now, this is giving you a trading edge. Because we're effectively so early in the month, right, that it's practically the entire month. So this, current high break odds at 68.9%, that's 70% chance that we're going to break that previous high. And if we do, we'll probably we'll probably move above it, significantly. Now, whether or not that's going to turn into a blow-off peak and then, kind of a move back into for the rest of Q3 or not is a good question. I don't know. But right now, this is really good follow-through action if you look at it from a quarterly perspective, because these last 2 bars here are Q3, right? This is July and this is August. This is Q3. This is Q2, right? And this is Q1, and that's Q4. The Q4 was a breakout. Q1 was non-committal, a retest, and then Q2 we broke higher, and now Q3 we've already broken the previous high in Q3. So the quarterly chart for gold looks great. The weekly chart looks relatively strong, and the monthly chart looks pretty good. It's a bull market, folks. All right, same thing in Bitcoin. Let's look at the monthly chart in Bitcoin. We're now this rally in Bitcoin is now 6 months old, right? Or really 4 months old, but the uptrend is 6 months old. But we're now 4 months old. This arrow should be pointing at this bar. This is July. This is what I wanted to say. There's no monthly close yet here in August. I apologize for that. But this was a strong monthly close. Given the size of this bar, given the huge volatility, this is our normal range, low to high. Now, this is only over 34 months. So this is these data. This is the first time I've ever produced any of this data for Bitcoin on a monthly chart, on a monthly basis. It's only 34 months that we've been consistently above $1,000. And that was my arbitrary cutoff here. And mostly just to keep the statistics reasonable and rational. But, the average move low to high in Bitcoin is $2,000. Well, last month it was, $6,000. Well, it was a 3 sigma month, and we still closed above the middle of the bar. Hugely bullish signal. And then we open August, and with 3 days it's already moved, $900. Very, very strong. Just incredibly strong. We had a huge close here, and then open. It's just ridiculous. Just so good. Actually, there's something. This data looks off. Now that I look at it, no, I have to think about it. But it's still, either way, still a very, very strong, very, very strong position that Bitcoin's in. Though it will need to break this high here within a month or two, within either this month or next month. Otherwise, this will become a major peak, and then we're going to continue to collapse. The good news is that the $9,000 support area has been tested, retested, and it looks strong. And if we can, if Bitcoin continues to play above 10,000, then that $9,000 on the weekly chart is very clear, and the $9,000 level looks like it's going to hold. Okay, Brent Crude. So I want to talk about Brent Crude. I got both the weekly and the monthly chart for Brent Crude, and here's the thing. Okay, going back to April, I notated these back-to-back-to-back reversals, and it was pretty strong that this is a bearish reversal, bullish reversal, weak, bullish reversal, bearish reversal, right? Never breaking above this level here as strong resistance. So that caused a collapse. I told you that this was I predicted this would be bearish. It was. We got a $15 move down in oil. So for those of you who took my advice and were able to make some money on that, bully for you. I'm absolutely, chuffed for you, but in every way. And then we got a big, huge reversal here on the shoot down of the drone, and then a collapse. What's interesting here is that this is the shoot. This is where Iran shot down the drone. This is where Rand Paul met with the Iranian Foreign Minister Zarif, who we've now since sanctioned, and noticed that there was a very weak rally here. This is 7 cents above this close as the highest weekly closing price. But look at the resistance that formed up here. And then once that happened, boom, it collapsed. And then since then, we now have a lower low. So now we've got a series of lower lows. We've got a series of lower highs. This is a downtrend in oil on the weekly chart. And here's our support line at 59.45. And that's shown in this chart right there. So now the real question is, oil, this is the bull market in oil. This is still a series of higher highs and higher lows. All right? Low, 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 low. All these lows are higher. Unless this one fails. If this one fails this month, then we have to start looking at this as a new downtrend in oil. And that this low here at around $50 comes into play. All that we need here is a low that gets violated. Now all of a sudden everything starts to unravel, as it were. But all of these, even these minor lows, these are all higher lows, all higher highs. And then once this chart starts to get a little ugly, if this level doesn't hold, that's going to change the way the market. That's going to change the tenor of the market. It's a signal that we're either setting up for consolidation between $50 and $60 a barrel, or we're going to even go below 50. And with the war premium and this, that, and everything else, I just don't understand how anybody can be bullish on oil right now. The Fed's cutting rates. The dollar is breaking out to the upside. Gold is not moving on an inflation trade. Gold is moving on a safe haven trade. Oil is not a safe haven asset. Oil is a risk asset. Oil is a risk asset based on, a global growth story and a higher demand for oil. And I don't see that. So I'm having a hard time believing that oil is going to $70 or $80 a barrel. Now, war breaks out, the chart means nothing. But I don't think the chart is telling us right now that anybody's handicapping that war is going to break out. I think they're taking Donald Trump at his word. All right, let's talk about the euro. So, haven't talked about the euro for a while. It was interesting when I was putting this together. I had realized that I hadn't talked about the euro price of gold. I've talked about the euro pound cross. I haven't just talked about the euro versus the dollar. And it's interesting when I was putting this chart together this morning. I realized that I couldn't just copy and paste in the last, or just type in the last week or two's worth of data. I had to go back to May, so I actually meant downloading a whole bunch of data and manipulating it, moving stuff around, and rejiggering the spreadsheet. I had a lot more work than I normally would do. And when I've got 1 or 2 weeks worth of work, I just kind of manually type all the data in. But I got 8 or 9 weeks worth of work. I'm smart and I'm a tool using human, and I tool using monkey, and copy, paste, manipulate data, and drop in whole blocks of data. There's no point in typing because I'm not that accurate a typist. For as much as I type, I should be a far more accurate typist than I am, and I am absolutely miserable. It is what it is. I'm not gonna change now. I'm 51 years old. All right, so the big thing here is that after the Fed announcement, the euro broke down below $1.1108, which is interestingly enough where we closed this week. So was there a little tape painting by the ECB into the close? I think so. I think the idea that the euro could close this week below $1.11 was anathema to the people in power, and I'm I don't believe that manipulation can change the trend. I just don't. I believe that markets are bigger than manipulators. Always have and I always will. They can manipulate in the short term, but they can't manipulate against the trend. Because at the end of the day, of a lot of people, there's always more people who are on the other side of the trade than you are. It's just the way it is. And they can manipulate things for a long time, but they can't manipulate the trend. The trend will always tell you, even if you have to go farther out in time, they may be able to manipulate for months at a time. It's fine. The yearly chart will tell you what the trend is then. Just keep going out in time and you'll find it. You get past a certain point, yeah, okay, fine. They win. But I don't believe that. I usually believe that the most manipulations are obvious on the sub-daily, daily, and maybe even as far as weekly charts, but in terms of monthly charts, it's really hard to do. They do manipulate like quarterly closes and stuff, but it doesn't matter. It doesn't change the trend. All it does is delay the inevitable. Okay? And the inevitable here is that the euro is going to $1.34, which is the 2016 low. And when you look at this, you have to say to yourself, that's just not that much. That's just not that much distance. When the euro can break 3-4 cents in a month with no problem. So by the end of the year, we could be talking about the euro challenging the 2016 low, especially if things really begin to let loose. And it's looking a hell of a lot closer now than it did when we shorted the euro way back up here at about $1.25. And Gold, Goats, and Guns investment portfolio, we have a structural short on the euro that we've had since May of 28, since April, I think, of 2018, and out to here around $1.22, $1.23. So when I wrote it, when I was thinking about it was $1.25, but I was waiting for the breakdown. And once this breakdown occurred here, that's when we went short. So that reversal, that breakdown there, boom. And then it's been nothing but downtrend ever since. And now it's just a very structural, boring downtrend. But this could let loose to the downside. And that would be a climax low, and I would probably cover that position. Not saying that the euro is going to rally from there. That I don't believe. I don't believe the euro is going to rally before like 2022. But we could get a counter trend rally. I honestly believe that if everything comes to the pass that I think is going to happen, the euro is going to 80 cents or even 70 cents. So, and this might have been your harbinger of that this week. All right, and then the Dow Jones. Let's talk about the Dow Jones real quick. So, how best to describe this? Right now, we had this huge breakdown 2 months ago, which was immediately reversed. And this, by the way, is an open bar. So this is an up bar. This is a close above this high. So this is a 2-bar reversal. So back-to-back reversals. And in this case, the reversals are bullish. Now, in the grand scheme of things, during the Donald Trump tariff years, we're looking at a big, if volatile, consolidation area versus the central bank coordinated and managed low volatility years. You can see the difference between the volatility here and the volatility here. And then it influences these statistics because it's taking into all of this stuff. And I published, articles talking about the difference between the volatility here and here in the past. And this is 3 times the volatility that we have here. So, but you note these months where Trump lays off the markets, volatility drops, Trump starts attacking the markets, and look at the volatility. We've already got a greater range in the first 2 days of August than we had in all of July. And Trump was mad at the Fed for not cutting rates by 50 basis points, and so he put more tariffs on China. And he's got leeway to do that because the stock market's at an all-time high. And I think he's kind of maybe finally figured out that somebody is coming in and constantly supporting the market, which is actually in many ways kind of, it's both working for him and against him. So, and he believes that because